about 10 seconds here. Good afternoon. Thank you for joining. This is Michelle Savage again with XBRL US, and you're here for our webinar, Revenue Recognition, Impact of the New Accounting Standards on XBRL. We want to thank everybody for joining us today, and especially thank our speakers today. You can see their names up on the screen here. We have Elena Kirilova, who's Assistant Project Manager of XBRL at the FASB. We also have Donna Johanneman, Senior Project Manager of XBRL at the FASB. We have Lou Roman, who's Vice President of XBRL Services at Merrill Corporation. And Lou is also Chair of the XBRL US Data Quality Committee. And finally, we have Campbell Pride, President and CEO of XBRL US. Just a couple of logistical points before we get started on the agenda. We are offering CPE credit for the program today, and for those of you who are who've elected to get CPE credit, please make sure that you respond to the questions, which we'll do at 2 points during the presentation today. Also, if you have questions as we go through the presentation, please click on the Q&A link at the top of your screen, and you'll be able to input your questions, and we'll take them at different points during the program. If you have any kind of technical issues going through the program, please email us at support@xbrl.us. That's SUPPORT@xbrl.us, and we'll do our best to get you back and online. So with that, I'm going to go through our agenda for today. First, we're going to focus on taxonomy improvements for revenue recognition. And Elena is going to take us through the changes that have been made to the US GAAP financial reporting taxonomy to accommodate the new RevRec standards. Lou is then going to talk to us about some of the challenges with the revenue recognition standards, specifically to XBRL. And he's basically going to discuss these challenges with Elena and with Donna Johanneman. We'll then take a couple of CPE questions, and then we'll turn it over to Campbell Pride, who's going to talk a little bit about some XBRL best practices when working with these new standards. And then we'll close with a couple of additional CPE questions. So with that, I'm actually going to switch slides now, and I'm going to turn this over to, not to Donna, to Elena, who is going to talk to us about the new standards and how they've been incorporated into the taxonomy. So, Elena.
Thank you, Michelle. I'm going to cover the improvements we made for both 2017 and 2018 taxonomies, specifically related to revenue. I'm going to quickly read the disclaimer, next slide, to cover all FASB presenters. The views expressed in this presentation are those of the presenters. Official positions of the FASB are reached only after extensive due process and deliberation. We made some significant improvements to the 2017 and 2018 taxonomies related to revenue. I would roughly separate the changes into two categories: changes to the statement of income, specifically modeling for revenue and cost of revenue. Those changes were made predominantly in the 124.30 relationship group, and also changes to the modeling for the disclosures of revenue from contract with customers. We even created a new relationship group for that, for such elements, which is labeled 606.30 revenue from contract with customer. Now, let me explain each of them in more detail. As some of you might have noticed, we made significant improvements to the modeling of revenue and cost of revenue sections in the statement of income. There were several reasons for the changes. One of them was to comply with the requirements under topic 606. Specifically, we needed to remove certain concepts, such as those related to discounts and allowances, as they're no longer, as they're now included in transaction price and are not separately presented. We also removed elements related to gross and net revenues, since these concepts are no longer applicable. And because we were already making substantive changes to the revenue section of the statement of income, we decided to expand our work and focus on remodeling both revenue and cost of revenue topic as a whole. to minimize the amount of extensions currently created for line item elements when tagging these concepts. And also, more importantly, to address the comments received from stakeholders during the taxonomy efficiency and effectiveness review. Just so you know, the results of the review and additional information can be found on our website. The feedback received supported the use of dimensions for the disaggregation of on the primary financial statements to eliminate multiple ways of tagging the same information. So what are some of the changes? We specifically to the statement of income, we added product and service access to the statement of income relationship group and expanded the list of members as its children. We added revenue from contract with customer, including a sales tax element to the revenue section of the statement of income. This element was actually created last year, but it was located in a disclosure, well, it still is located in the disclosure relationship group for revenue from contracts with customers. While we did not move its sibling element, revenue from contract with customer, excluding assessed tax, from the disclosure relationship group for revenue, it can still be used to tag income statement values if applicable. I will demonstrate the difference later in my presentation, so you'll see what the difference is. Another change includes creating two extensible list elements for type of revenue and type of cost. In addition to the changes above, we removed a significant number of specific revenue and cost of revenue line item elements. For some of those specific revenue and cost of revenue elements with high usage, we created corresponding member elements and located them as children of product and service access. So for example, we had advertising revenue and advertising revenue cost elements. They were deprecated and advertising member element was created. The member elements are intended to be used in conjunction with revenue from contract with customer line item element to identify the type of product or service of the disclosed revenue. I will discuss the specific example later. All revenue line item elements that are not within the scope of topic 606 did not change. That includes premiums earned net element for insurance revenue and operating and capital leases revenue. The improvements related to disclosures for revenue from contracts with customers were driven by the ASUs. As I already mentioned, we created the new relationship group 60630, revenue from contracts with customer. The elements from the previous relationship group 44030, revenue recognition and deferred revenue, will be deprecated after the transition period is over. We added taxonomy implementation notes to those elements to clarify that they should be used when a company applies transition guidance, for non-public entities. We also published the taxonomy implementation guide on the taxonomy page of FASB's website and added taxonomy disclosure templates for each example presented in the guide. One of the examples in the guide includes new type of element, type dimension, and demonstrates its proper usage. As I said before, you can find the guide on FASB's website. The guide was exposed for comments through May 30th, so we're currently working on publishing the final version. The guide includes two sections. One section is with examples for disclosures related to revenue from contracts with customers. You can see on the slide all the examples listed. So we have disaggregated revenue, contract assets and liabilities, remaining performance obligations, and some transitional guidance. And the second section includes 5 examples for revenue and cost of revenue in the statement of income. All the examples, again, are listed on the slide. Now let's take a look at our first example. Here's an excerpt of the income statement for company A. As you can see in red, the company is disclosing that it has revenue from contracts with customers related to the sale of products and services. It also has revenue from leases highlighted here in blue. The costs in this example mirror revenues with the cost of revenue broken into product and services, and there are also lease costs. So what elements should be used to tag these values? The filing has revenue from two sources: revenue from contracts with customers and revenue from leases. Since revenue from leases is out of scope for topic 606, it is not included in revenue from contracts with customers and is presented and tagged separately using a line item element, direct financing lease revenue. You can see the element in the blue box. We assume in this example that all lease revenue comes from direct financing leases. There is no further disaggregation of revenue from leases, so the tagging is done. However, revenue from contracts with customers is further disaggregated into products and services. As a result, it should be dimensionalized using axes and member elements. All three amounts for revenue from contracts with customers, highlighted in red boxes, should be tagged with a line item element, revenue from contract with customer, including assessed tax, and dimensionalized like this. 879 is tagged using revenue from contract with customer, including assessed tax and product member. 564 is tagged using revenue from contract with customer, including assessed tax and service member. And 1443 is tagged using just revenue from contract with customer, including assessed tax line item, since it's a default value or report-wide total for the other two. The same principle applies to tagging the cost of revenue. Costs related to revenue from contracts with customers are tagged with cost of goods and services sold line item, and member elements, product member and service member. There's no default or total here since it is not disclosed in the filing. So the lease costs, as you can see on the slide, are tagged using cost of goods sold, direct financing lease. Now, here's what it would look like in the viewer of the XBRL report. You can see the amounts for revenue from contracts with customers and related costs are dimensionalized using product member and service member, but only revenue from contracts with customers has a default or a subtotal value. You can see it in the report-wide value column. Cost of goods and services sold do not have any subtotals, so the report-wide value column is empty. There is something else I wanted to point out in our modeling for revenue. If you look at the relationship group 12430 for the income statement, you'll see that there's only one element for revenue from contracts with customers. It ends with including assessed tax. This element is for filers who make an accounting policy election to include taxes assessed by a government authority in their measurement of the transaction price. However, what if a filer decided to elect a policy to exclude such taxes from the transaction price? What element should they use? In this case, the appropriate revenue element is actually located in the relationship group 60630 and is called revenue from contract with customer, excluding assessed tax. You will not find this element in the income statement relationship group, but it can still be used if applicable to the filing. In our example, the filer chose the accounting policy to include excise tax in the measurement of the transaction price. You can see the excise tax is presented as a separate line item in the red box. As a result, the appropriate element to tag the revenue from contracts with customer is the one that ends with including assessed tax. And with that, let me turn it back to Michelle.
Thanks very much, Elena. Okay, I'm going to switch slides here again. And I'm going to turn it over to Lou Roman now.
Thanks, Michelle. I have about 7 challenges here that pop up when trying to tag and look at what Elena just talked about. And the changes she went through, the first challenge is awareness. The changes, there needs to be a general awareness of them. Yet I think there is a lack of awareness from the filers that the tags need to be used when ASC 606 is adopted. So I've talked to filers that didn't know that the changes were needed and they needed to be applied when they adopted the new RevRec standard. But fortunately, I think the attendees on this webinar, since you're listening and you'll hear about the changes, I hope you'll absorb them and apply them as needed. Hopefully the word spreads appropriately so that all filers get the message, but awareness itself is key to doing the proper tagging. The second challenge I have that always pops up is, does this tagging change apply to me? The likelihood that the changes we're talking about will require a tagging change to your financials is very high. The tagging change doesn't apply to financial institutions and insurance companies, although some banks and may have some non-interest income, in which case this does apply to that. But other than that, other than the banks and financial institutions and insurance companies, it's very likely a tagging change will be necessary because of this. To get more specific on this and further clarify who it applies to, including the financial institutions, I'm going to ask Donna from the FASB to provide some further information on this, on the scope of it. So go ahead, Donna.
Sure, Lou, thanks. As Lou said, this is applicable to all contracts with customers, except for ones that are explicitly scoped out. And those, as Elena and Lou have mentioned, some of them already, the topic 842 leases and topic 944 insurance are scoped out. Financial instruments that are in the scope of other topics, such as receivables, investments, debt, and derivatives, are also scoped out. But a financial institution may have, much of its revenue from contracts that are scoped out, but if it's providing services such as advisory or professional services, they're likely to have some that are in the scope of topic 606 and some that may not be. And I think Campbell would be talking about this a little bit later. Also scoped out are guarantees that are within the topic of 460 and some non-monetary exchanges. So when you're selecting taxonomy elements around revenue, as Elena illustrated some of those, they're very specifically for the revenue from contracts with customers that are within the scope of topic 606. And those are required to be disclosed separately from other sources of revenue. So keep that in mind. I'll turn it back over to you, Lou.
Sure, thanks. Let's go back to the slide with the challenges on there. And we talked about two of them. And a third challenge that we have is the effort to make the changes. So it takes time to make the tagging changes that we're talking about. And likely you've already put in a lot of time into the RevRec standard itself. That's expected. But now companies are finding out that yes, in many cases, this tagging change takes a fair amount of extra time, which includes the time to prepare the tagging and probably even also review it as well. So plan accordingly. However, I always say make sure that you know that it's time well spent, because it's really a one-time change. So do it right the first time, and then you'll have it right for the tagging going forward. A fourth challenge here is the timing of when to make the tagging changes. So it seems quite simple. Make the tagging changes when you adopt the new RevRec standard. Simple as that. But there's some nuances, of course, and to do that, I'll need to break this down into two parts. One is the calendar year-end companies, and then secondly, the non-calendar year-end companies, because it's different for each. So for the calendar year-end companies, you would primarily have already adopted AS 606 in Q1 of 2018. So you've probably already filed using the new RevRec standard and hopefully with the new tagging changes. But unfortunately, some filers improperly didn't make the tagging changes, even though they adopted. And there's also some early adopters of RevRec in 2017, and I know some of those improperly didn't use the new tags. And again, that's very unfortunate. This webinar that we're doing, it's happening in June, so Q1 filings are already finished, and Q2 is coming up. So if needed, refine your tagging for Q2 based on this webinar and things you're learning, if needed. Whether that's a whole-scale change from Q1 tagging or just simply a tweaking of the tags that you selected in Q1, whichever is appropriate, please do that as needed. Now, that was calendar year-end companies. For the non-calendar year-ends, you probably haven't adopted the RevRec standard yet, but you might want to change to the 2018 taxonomy, because in the 2018 taxonomy, you want to be using the most current one and take advantage of the improvements that FASB has talked about. The challenge is that if you switch to the 2018 taxonomy, some of the tags that you're using for revenue tagging, and maybe some other tagging as well, some of those tags have been deprecated in the 2018 taxonomy due to the RevRec changes. So that becomes a dilemma, and I can think of three options for the non-calendar year-end companies if you, and this is if you haven't adopted 606 yet, but you want to change to the 2018 taxonomy. And the first option is you could change to the 2018 taxonomy and extend for those tags that you need, which have been deprecated. And that would work, but it does result in increased amount of extensions, which is a downside. A second option is you could stay on the 2017 taxonomy and then change to the 2018 taxonomy in the same quarter that you adopt the new RevRec standards. This option seems logical. It seems the simplest, and it really doesn't require any extra extensions for what are considered common disclosures. A third option is you could change the 2018 taxonomy now prior to adopting the RevRec standard, and then for those tags that have been deprecated that you previously used, you could determine tags that haven't been deprecated in the taxonomy, which are still appropriate for the disclosures and your situation. That can require some dimensional structures which weren't previously tagged with dimensions. In that case, then later when you do adopt RevRec, you'd use the new RevRec tags in the 2018 taxonomy and go forward from there. So that's a third approach that could be done. It make sure you work with someone that knows what they're doing with that, because you need to figure out, which tags are appropriate and which ones to use. It's a doable situation, but it does have its complications. For these non-calendar year ends, you can choose to do any one of those options. There's no SEC directives on this to say you must do this. Rather, it's whatever is appropriate for your situation. I'm going to go on to a fifth challenge here. And that fifth challenge is that many tags have been deprecated that were previously used. And the problem with that is it results in a company having to delete previously used tags and then making new tag selections, as well as some other changes. So it's likely that some of the revenue or cost of goods sold tags you were using have been deprecated in the 2018 taxonomy. So saying you'll just keep the tagging the same as before when you change to the 2018 taxonomy after you've adopted RevRec, that's not going to work. It's impossible, because the deprecated tags become a challenge if you're not up to speed on what's happening. Fortunately, Donna, I know, has some specific observations on this challenge to more specifically say what I'm talking about, and I think that's going to be valuable. So Donna, I'll pass it over to you.
Okay, thanks, Lou. Yeah, we did take a look at some of the filings that after the adoption of Topic 606, and we will be performing a more comprehensive post-implementation review, as we call it, after a cycle has been completed, to see where we may need to add elements or clarify some. Some of the initial observations we have been around element usage or not using the intended modeling structures, and I'll just go over some of these briefly. So our first observation is to make sure you're using elements that are applicable under the guidance. As Elena mentioned earlier, we moved or removed elements that are no longer applicable under Topic 606, such as revenue, net, and gross, because sales discounts, returns, and allowances are no longer presented separately and are just part of the transaction price. We also have capitalized contract cost line items that can be used within Axis if the costs are broken down into more specific types, instead of using or extending for the deferred revenue line item elements, which are now in that ELR 44000. And the example 4 in the Taxonomy Implementation Guide has an illustrative disclosure of the capitalized contract costs. Another thing to make sure you're aligning the appropriate revenue from contracts with customers element with the policy election made about whether the taxes are included or excluded. Elena noted that one of these is in relationship group 124.000 and the other in 606.000. Also, use elements available in the taxonomy and avoid extensions if possible. We have an element for the amount of remaining performance obligations, but the name doesn't actually contain the word amount, even though the label does, and we were seeing some extensions with the amount and the element name. And the name is just a unique identifier, and it's not a component of the element that should be used for element selection or for not selecting. Also, use the structures provided in the taxonomy for the type dimension, which we'll be talking about a little bit later, instead of extending for an explicit dimension. We will see, there are some examples in the guide, and I think Elena will be walking us through those later, how to use the start date axis and with the line item to convey the timing information. You know, hopefully this is maybe a temporary issue, as it is possible that some of the software tools may not have made this mechanism readily available. Similarly, we were seeing the line item extensions to capture this information instead of using the type dimension structure that's in the taxonomy. And the intent of the type dimension is to provide a consistent structure for highly variable information. So when using this structure, consumers of the data know that the member on the axis is the start date, and the format for the period line item element is the same across all companies, even though the value may vary. So this is similar to the previous slide, but it's for when the value is disclosed as a percentage instead of a dollar amount. The elements are available for this, and the type dimension structure should be used in this case as well. As Elena noted and demonstrated in her examples, the income statement was remodeled, and the intended modeling is to use the appropriate revenue line item with the product and service axis if disaggregating multiple types of revenue, instead of using elements that have been deprecated or extending for line item elements for the specific type of revenue. One last area that I want to talk about is the transition disclosures. The full retrospective method restates the earliest opening balance of equity with a cumulative adjustment, and the balance sheet amounts are restated. Therefore, for the full retrospective method, the intended modeling is to use the previously reported and the restatement adjustment members. Also, I want to note that these members are under the restatement axis for the 2018 taxonomy, but for 2017 and prior, they're under the scenario axis. For the modified retrospective method, which is not a restatement of the opening balance, but a cumulative effect adjustment in the period of adoption, the intended modeling for the stockholders' equity statement is the line item for the cumulative effect of new accounting principle in period of adoption. The balance sheet amounts have not been restated. For the additional disclosures required for this method, the taxonomy has the initial application period, cumulative effect, transition axis, and the member difference between revenue guidance in effect before and after Topic 606 member. And there's also a member for the disclosure of the value that would have been calculated under the guidance in effect before Topic 606. So I'm going to turn it back over to you, Lou.
Thanks. Good information there on what to do with new tagging, especially when the item you used to use was deprecated. The sixth challenge that I have, there are some new types of elements in the 2018 taxonomy that will very likely impact the new RevRec tagging. What these new types are, there's two of them. One is extensible lists, and the other is type dimensions. Already in this webinar, we've talked about them just a bit, but let's talk about them a little bit further, because they're new items in the taxonomy, and filers need to understand what they are, how to use them, and then of course when to use them, whether they apply or not. For that, I will pass it over to Elena from the FASB. She'll be able to provide some further explanation on what these new types of elements are, and some other related items as well. So with that, Elena, please go ahead.
Thanks, Lou. All right. So there are two new types of, and I'm only strictly talking about revenue and cost of revenue, by the way, not overall in the taxonomy, but there were two new types of elements used in our modeling for revenue, a type dimension element and an extensible list element. Now, let me walk you through two examples from our implementation guide that illustrate how these elements are used. The first example focuses on extensible list, and as you can see, it's example number 7 in the guide. Here we only have one revenue line item, the revenues from contracts with customers, and all of it is related to the sale of products. And this is a crucial distinction. Unlike in my previous example where revenue from contracts with customers was disaggregated into two types from products and services, here the whole amount of revenue from contracts with customers relates to only one type of revenue, products, and there is no disaggregation. The same applies to costs. So how should this be tagged? We created two extensible list elements for the type of revenue and the type of cost for 2018 taxonomy. On the slide, you can see in blue boxes that we're going to use two elements to tag revenue. Revenue from contracts with customer, excluding assessed tax, and type of revenue extensible list element. Both elements and line items, so there is no dimension here, unlike in my other example. The same applies to costs. We will be using cost of goods and services sold and type of cost, good or service extensible list elements. Oh, back to the previous slide. The cost elements are highlighted in red. Extensible list element was chosen over dimension here because both revenue and cost of revenue are not disaggregated into several products or services. Both revenue and cost of revenue are presented for only one type of product and service product. Just a quick note. Just a quick note that excise taxes are not separately presented in the statement compared to my previous example. We are assuming that the filer elected an accounting policy to exclude taxes assessed by a government authority in their measurement of the transaction price. As a result, the filer is using revenue from contract with customer excluding assessed tax element. This element is not presented in a statement of income relationship group 12430. You can find this element only in a relationship group called 60630, disclosure revenue from contract with customer. Now let's go back to extensible list elements. So how are they used? Here is the XBRL report view. In the blue box, I highlighted the tagging of the revenue line item. The value of 1,650 is tagged using revenue from contract with customer excluding assessed tax. The value of this extensible list element for revenue can only be a member element name. It can either be a taxonomy or extension element. In our case, since revenue is related to the sale of products, we are going to use a taxonomy element product member. The element itself is a value for type of product extensible list. The extensible list value is telling us that the revenue is related to the sale of products. Just remember that extensible list elements should only be used if there's only one type of product or service disclosed. It would not work in my previous example where revenue was disaggregated into two types, products and services. The costs are tagged in a similar manner. On this slide, I highlighted the elements in red. The element cost of goods and services sold is used to tag the value 923. The extensible list type of cost, good or service, is used to tag product member. Again, notice that the element name itself is a value. Also, the prefix US GAAP is used to indicate that this is a taxonomy element. The prefix is a part of an acceptable format for extensible list values. When using extensible list elements, the value should be a prefix, either US GAAP or the company's prefix, colon, an element name with no spaces for a single value. So the value here for both extensible list elements is US GAAP, colon, product member. And with that, the tagging is done. My next example is also from our implementation guide. It's related to the disclosure of remaining performance obligations. We modeled this example with the type dimension element. Now on this slide, on the right side, you can see the filing. The remaining performance obligations as of December 31st, 2018 are disclosed for 2019, 2020, and thereafter periods. The type dimension element is used to indicate the start date of each period. It can only be used in conjunction with the line item element for the period duration. As you can see below, I highlighted both elements in the red box. So for 2019, the remaining performance obligation period is 1 year, from 2019 to 2020. So P1Y is a value for L6 line item element. The start date of this period is 2019-01-01. So 2019-01-01 is a dimension member created under revenue, remaining performance obligation, expected timing of satisfaction, start date axis, which is a type dimension. 2019-01-01 is a dimension member and is not a value. For 2020, the start date is indicated using a dimension member 2020-01-01 and a line item for the duration of the period with the value of P1Y. However, for thereafter, the start date is 2021-01-01. However, since the duration of the period is indefinite, the value of the line item element for the duration of the period is nil. So to sum it up, revenue, remaining performance obligation, expected timing of satisfaction, start date axis is a type dimension. This type dimension is actually called multiple date dimension in the guide because only dates can be used as dimension members. No other format is allowed. So in my example, the format is 2019-01-01. The dimension members will only appear in the instance document and not in extension taxonomy. Type dimension can only be used in conjunction with the line item element to provide the complete information. In my example, it was used with revenue, remaining performance obligation, expected timing of satisfaction, period. Now, I hope these examples clear up any confusion about the new types of elements. Donna, do you have any more comments?
Yeah, there was one thing I wanted to note, that currently you cannot have a default on the type dimension. So this is under review with XBRL International, and there may be an update coming that will allow for this. But in the meantime, what does that mean? You will need to have the line item for the remaining performance obligation here, this L7 in this example, in a relationship group that does not include the type dimension. So in order to tag the 10,300 in the default, it will need to be located in a separate relationship group. Our templates in the taxonomy that Elena had mentioned before have this built in, and you can use it for this disclosure. And as she mentioned, we have templates for all the examples in the first section of the guide available in the taxonomy. And these can be imported into your extension taxonomy. You can't remove items that are built into the template, but you can add to them as you need. And now I'll turn it back over to Michelle.
Yeah, thanks very much, Donna. Turn back to Lou.
Yep, we got one more challenge. So if we go back to the slide with the challenges on it, the seventh and the last challenge that I wanted to mention is that if you use the modified retrospective method of adopting the RevRec, questions arise about how to tag the prior period numbers. So for the current period numbers, those are under the new standard. But for the prior period numbers, those numbers are recorded using the old standard. So where that causes a question for tagging is which tags should be used for the prior period numbers. Should you use the same tags for those numbers as you used in the prior filings, or should you use the new tags that are being used to tag the RevRec for the current period? And without guidance on that, I think half of filers would do it one way and the other half would do it the other way. So to cover this one in more depth and to talk about other topics as well that are key to the proper tagging, I'm going to pass it over to Campbell Pride. And Campbell, you can go ahead with your section. And I know in that section, you're going to cover this modified retrospective method issue as well. So go ahead, Campbell.
Actually, Lou, before we turn it over to Campbell, and
yep.
Campbell, sorry to interrupt, but we're going to go through a couple of poll questions here.
Good.
Just for those people who are looking for CPE credit. So I'm just going to go ahead and open our first poll. And you should be able to see this on your screen now. So the first question we have is, which of the following has the FASB done to improve the modeling of revenues and costs of revenues in the statement of income? And just click on the radio button that seems most appropriate, and I'll read through the possible responses. Removed the product and service axis, added revenue from contract with customer, including assessed tax in scope for ASC topic 606, or removed extensible list elements for type of revenue and type of cost. So click on the one that you think is most appropriate if you're looking for CPE credit. So we're just going to give this a couple more seconds. Okay, I'm going to end the polling now. And we're going to pull up our second poll. Okay, and you should be able to see this now. Which of the following changes were implemented for revenue from contracts with customers, notes, disclosures? Is it response 1, created new relationship group 606,000 revenue from contract with customer? Or in the previous relationship group, 440,000, existing elements will be retained after the transition period is over? Or is it response number 3, a new type of element is included, the explicit dimension? So we'll give this a few more, about 20 seconds. And I'm going to check. I think we have a few questions here. Okay, we're going to close the poll in just a few seconds here. And then we have a question from the audience. Okay, so I have closed the polling. And we do have one question from the audience here. We are adopting 606 using modified retrospective method for Q1 ended May 31st. And we are a non-calendar year-end company. We were not planning to move to 2018 taxonomy this quarter. Do we need to do that, or can we use the new tags and make them extensions using the 2017 taxonomy? So I think Donna and Elena, that's probably a good question for you guys.
And I'll jump in if.
Or Lou.
I'll throw my 2 cents in, is that I would say it's fine to stay on the 2017 taxonomy. For the most part, you would have to make extensions for the items that have been deprecated. And yeah, I would make them, you know, as much as possible related to the taxonomy as you can. But yeah, very likely you'll have to make extensions for those items. If anybody else has any comment, go ahead.
Yeah, if you're not rolling forward, you're going to need some elements that are in the 2018. So, right, you would need to extend, and the best would be to extend based on those element names that are in the 2018, so that it's easier to roll forward, and at least from a consumption of the data, they would be consistent element names.
Great, thank you. Thanks very much. So we're now going to move on, and let me just the CPE questions. And I'm now going to turn it over to Campbell Pride to talk about best practices using XBRL with RevRec.
Thank you, Michelle. Thank you, Lou. Thank you, Donna and Elena. So some of this is a little bit repetitive of what Elena went through. So I'm not going to concentrate on how you do this, but just some of the weird cases that come up and how to deal with them. So in the first case, we have this disaggregation of revenue situation that Elena went through. If you have something which is, there's disaggregation of revenue and you only have one item, which is pretty obvious in this case, we have revenue and you have products. And as Elena said, tag it with the revenue recognition, the main revenue element, and use the extensible enumeration. Sometimes it's not that inherently obvious, and you may just have one line item saying revenue from widgets, or whatever product it is. And then you still use the same element, and you can use the extensible enumeration to basically just clarify what that particular product is. So if you go to the next slide, Michelle. So basically, don't use this. Never use the product or service axes on the face financials if you're only disaggregating it by one item. It's just a general rule which can be followed. When you're using the extensible list, you've got to use this member name. So you can see here, this is picking up Elena's example with the product member. So sometimes you're not going to have a product which is available in the US GAAP taxonomy. You may need to create an extension for that. If you do create an extension member, you have to create that extension member, and then you put the name of that in here. Rather than US GAAP product member, it might be your own company, like widget company, widgets, advanced widgets, whatever it may be. So just want to, for that situation, you may find yourself, you may need to create an extension. The way this enumerated list currently works is intended to work is that it basically, the items, the text that you put in there should match a member that's sitting on the product or services axis. So you just can't put anything in there you like, you've got to put something that matches. And we'll be rolling out rules to help you find those, and just to make sure, hey, if I put something in this, if I put the text string in there, it's got to match what one of the members sitting on the product or service axes are. So we go to the next slide, Michelle. So use of the revenues element. So there's obviously we talked about totals earlier. There's 606 revenue, non-606 revenue, and you can have an aggregate total for that, maybe, for example, in a bank. So the generic revenue elements can also be used should be used on the income statement in these cases. And this will usually be used to give you the total of revenues, including both 606 income and the income that's not 606. If all of your income is 606 income, it would be preferable to use the contracts with customers when all that income is 606 income. And that just makes it much cleaner. You only have the one element, and it's also going to be also tie back to your notes when you're doing your disclosures, breaking down that 606 revenue and those disclosure plans. So it would make sense to use the more specific element on the income statement, and we would generally recommend that you do that. Don't go and use the revenues element if it's all 606 income. Can you go to the next slide, please? Sales and excise tax, we kind of talked about this a little bit here. This is kind of important for a number of issues, as the investment analysis community reverses excise tax out of revenue so they can get the right gross margin numbers. So one of the things that there's situations that have come up, folks they don't have sales tax. Sales tax is not applicable for them at all because they're in whatever industry where there's no excise or sales tax. In those cases, what we're recommending folks do is just to use the contract from customers excluding sales tax, including you're not going to ever have it. So use the excluding sales tax in that case. But then you wouldn't need to go and use the policy text block element that says you've excluded it. However, if you are a company that has sales tax, but you're excluding the sales tax, you obviously can still use the excluding sales tax element, but you want to also obviously complete the policy text block element, which says, we're reporting revenue exclusive of sales and excise taxes. Okay, so the next thing, just in terms of element consistency, relates to so when reporting income statement balance sheet items, and this kind of goes back to the modified retrospective approach, is if I'm reporting revenues over a 3-year period, for example, or 3 quarters, or whatever it may be, use the same element for every quarter. We've seen some companies have said, okay, I'm going to use the RevRec element for my current period, but I'm going to use the old element for my prior periods. Don't do that. So you should use the same element for all periods. So do not mix those two elements up. And in fact, you're not really going to be able to because a lot of those elements have been deprecated from the taxonomy. So don't go and create extensions for those. So basically, if the company has restated prior periods or has used the modified retrospective approach as well, the same element should be used across all time periods. So if we go to the next slide, we have a situation with a bit more. So the general rule to follow here is, in the FASB's group these together, is if you've got elements, and there's a section called 606,000, that may not mean much to you, but if you go and look at the taxonomy, you'll see that there's a whole section of elements in the 606,000 section of the taxonomy. These are the 606 elements. And then there's elements in the 440,000 section of the US GAAP taxonomy. Each one represents 606 is obviously the 606 elements, 440,000 is the elements before 606. You shouldn't be mixing and matching the two elements from those two groups. DQC is working, the Data Quality Committee is actually working on a rule that will automatically check that for you, which should say if you've mixed and matched these two elements. So avoid doing that. So if you see elements from one group, don't use the elements from the other group. Those two sets of elements are completely incompatible, and they shouldn't be spanning across periods. Once you've gone to 606, use the new elements for prior periods. Okay, the next slide. Some folks have asked, well, you know, these elements from the prior period are really the guidance from the prior period. Maybe we should be going and sticking a member on all the prior period elements that indicate that they were calculated under the revenue guidance in effect before 606. And there's actually a member in the taxonomy that theoretically you could do that, and that's it there. It's a long name. Calculated under revenue guidance effect before topic 606. Don't use that member on it. It's going to clutter up your income statement and your balance sheet. You don't need to use that. The intention of that member is that it should be used in the notes only, and it should be used for the current period. And this member is used in the disclosure in the notes to say, okay, this is what my revenue would have been under the old policy, and this is what my revenue is going to be under the new policy. And then there's a difference element as well. So this should be used in the notes disclosures. Don't promote this to the face of the financial statements. Anything that's in a prior period for data consumers, they're just going to naturally assume that data has been calculated under the old method. Okay, so Elena and Donna talked about this briefly. Revenue recognition for banks. Just want to bring this up just quickly, just so everyone, if you're a bank, you kind of understand this. So typically in the income statement, you're going to have a combination of both 606 and non-606, especially if you've got fee income and different types of income. So typically what you're going to see there is the sort of disaggregation of the revenue for 606 income should appear in the notes. You want to make sure, obviously, it does. You're required to report that if you have a 606 income. But what you want to do on the face of the income statement is really have the total revenues for the bank, including non-interest income. Should be using the revenues element on the income statement. Some banks don't provide an aggregate total, but if you do, then use the revenues element for this. Don't try and use the 606 element. So we go to the next slide, please, Michelle. You'll just give you an example of why this is. So this is an example just of a bank we had a look at, and you can see in red, these are out. This is revenue outside the scope of 606. The items that are underlined in green within the scope of 606. So it's kind of a real mess. If you want to try and break this up and dimensionalize them, the whole thing is going to be very, very difficult for anyone to use. So just to make it simple for everyone, the 606 line item for revenue would be in the disclosure, and the breakdown would be there, and that's what most people do. And then the green items, all of us would be represented as line items. Can you get the next slide, please? This was talked about a little bit earlier, but there's just a couple of things we should just mention on this. This is the revenue expected to be recognized. And Elena talked about it, but obviously you're breaking up by this type dimension. So here's the same example Elena was talking about. If you want to just go to the next slide, Michelle. This is the same example here, and you can see the revenue recognition, the report-wide value. You report the remaining performance obligation amount of the $7,200. I'm just going to reiterate this again because lots of people have problems with this, and it'll probably come up, is you can't report the $7,200 unless you create another relationship tree which has that not using the type dimension. Donna probably explained it better than I did, but that's going to come up and you get that issue. There's two things you can either do. One, you can either take the template that Donna had mentioned, or you can create another group which basically has the revenue remaining performance obligation amount which doesn't have the type dimension. It's just a quirk in the XBRL specification that you can't create a default or an amount with no dimensions if it appears in a table that has a type dimension. So there's two ways around it, and you should probably talk to your service provider if you run into this. You will see it because when you try to file with the SEC, you'll get an Edgar error coming back telling you, hey, this is not a valid value. You go to the next slide, Michelle. The other thing is just on the start date axes. I think this was covered by Elena, so I don't think we need to go into this anymore. So if you want to go to the next slide. But just talk about the taxonomy template for a while, for a bit. If you don't want to create this, if you don't want to create the extra definition link base, there is this taxonomy template that's available. You can bring it in, and when you bring it in, it's actually done in the XML component of your instance document or your schema document. It can be in either place, but that would be something that if you're not familiar with this, you want to get your service provider to do, but you should probably ask them, how are you bringing this in? Are you creating it, or are you bringing it in from the US GAAP taxonomy? It's just one of the quirks that we've just seen people have had a lot of questions about this. So I just want to make sure everyone's aware of it. Can we go to the next slide, please? The remaining performance obligations, I'm going to bring it up again just because there's very little consistency in the way people are filing this at the moment. So we just want to make sure that they've got it right. The undefined end period, the thereafter amount, the 3,700, that has to be tagged with the nil value. So if you go to the next slide, Michelle, you'll see this. So you can see there is a nil value, right, at the intersection of L6 and 2020-0101. So that means the thereafter. If you go to the next slide, Michelle. Do not do this, and people do this. Don't tag the default value with amount of nil. So people have tried to say, hey, I've got the satisfaction period. I'm going to just put nil in the default there to indicate that it represents everything. Don't do that. The other thing you don't want to do is tag the default value with the period end of the reporting period. So some folks have done this too. So in there, that satisfaction period, they've basically said, okay, I'm just going to put nil in here, and that basically says, and then they also put a start date. They create a dimension axis, and they create a start date on it, which is the end of the current reporting period, and then they put a nil on the report wide value. And that all they're trying to do is to say, okay, this is my start period, and it's everything thereafter to represent the default. You don't need to do that. All you need to do is to basically have this remaining performance obligation. You need to have it in a separate table by itself, the 10,3000, and that's all you need to do. Go to the next slide, please. I think that's it. So
great, thanks for
CP question.
Thanks very much, Campbell. Yeah, we do have some other questions, but let me take the CPE questions first, just so we get those out of the way. I'm going to bring up our third CPE question, which is, as you can see here, what was removed from the statement of income relationship groups? And you have three choices: all revenue line item elements, specific cost of revenue line item elements, or specific expense elements. Which is the appropriate answer here? And we did get a question about the slide deck, and yes, it will be made available afterward. We will be sending out the replay from the program, so you can all listen to it again and take a look at the slides. Okay, we're going to close the poll in about 8 seconds. Okay, I'm closing the poll now. And we'll go to the last poll question, which is, When should the value reported for the revenue recognition remaining performance obligation satisfaction period be tagged as nil? Is it response number 1, when the reported value represents the aggregate amount for all periods? Is it never? Or answer number 3, when the reported value represents the amount for all periods that are remaining or thereafter? Or response number 4, when the value for the performance obligation is nil? So please record your answer if you're getting CPE credit. And we'll give it about another 20 seconds here. Okay, just another couple of seconds. Okay, so I'm ending the polling, and let's go to some of the questions that we've received. Let's see. The first question is: some deferred revenue liability does not fall under contract with customer category. It's not phrased as a question, but I'm assuming that is a question. You know, is some deferred revenue liability fall? Some does not fall under a contract with customer category. Donna, does that make sense to you, or?
But topic 430 in the accounting standard codification was superseded, which was the deferred revenue, and it points to topic 606. So if there's more information, they'd like to send us an email, we could check into that. Okay,
great, thank you. And the next question is, there are several string tags related to the implementation, such as the description of timing of recognition, description of payment terms. String items aren't generally required to be tagged, but are these aspects that should be tagged?
I'll jump in on that. They are not required to be tagged, that is correct. And they not necessarily should be tagged. I think most filers will not tag those items. The FASB taxonomy has to have everything in it that is required by the GAAP standards, and therefore those are required disclosures in the paper-based form. So tags are created so that that policy is followed. However, the SEC does not require those string items to be tagged. So I think most filers would not tag them.
Okay, great. And one question we got was that the webcast was scheduled to end at 3, and someone had to take off. If they stayed and answered the CPE questions, they should be fine. If for some reason they didn't get to them, we can figure out how to accommodate them. Just email us directly on that. And then the last question that we can take today is: can you clarify one more time the issue with tagging the total remaining performance obligation and how it relates to the specific periods and use of the type dimension axis?
Okay, I'll have one more crack at it, or if someone else wants to. So basically, if you have an amount that's reported in a table with a typed dimension, you cannot report the total. You have to take that line item and put it in a different table without the typed dimension, and then you can report it. It's an XBRL error. It's really got nothing to do with the nature of your filing or the US GAAP taxonomy. So there is an effort underway to amend the XBRL specification so that you can actually do that without having to create a second table. But if you try to create that, you'll get you should get an error when you try to submit it to the SEC, or you should get an error in the software that you're using. Sometimes you may not get an error because you may have used that element in another table somewhere and you're just not aware that you have, but you did, and then so you won't have a problem with it. But basically is that element, if it appears only in a table with the type dimension, you can't report the total for it.
Okay, great, thank you. Okay, that's it for our questions. And I want to thank everybody for joining us today. And thanks very much to Elena and Donna from the FASB, and Lou Roman from Merrill Corporation, and Campbell Pratt from XBRL US. So thanks very much, and watch for our upcoming webinars. We don't have anything scheduled right now, but we will shortly. Thank you.